joining you live here. Oh, whoops. There we go. Hi, everybody. Welcome to Climate Week again. Second installment of checking in from New York City. I'm Franz Hochstrasser, CEO and co-founder of Raise Green, and we are delighted to host this session on investing as a form of advocacy. We have a storied and well-versed guest with us today, and Jasper von Brakel is the head of the RSF Social Finance group, and we are delighted to be in conversation together to talk about how we can use dollars to get more done on the climate crisis. So Jasper, excited to be with you here, and would love to hear more about your background as well as what RSF Social Finance is and what it does.
Fantastic. Thank you, Franz. And I'm super excited to be here with you, calling in from the Bay Area. So I'm sending regards and regrets also to New York City. I wish I was there with you in person this week. It's a really important week, and I really want to appreciate you and Raise Green for putting this webinar together and to talk about how money can be a force for change and how investing can be a way to advocate for change and to help bring about change. So by way of my background, born and raised in the Netherlands, economist by training. I did some fairly traditional consulting in the beginning of my career, and then spent about 15 years in a, call it a social enterprise. So a for-profit company, a Swiss brand that actually manufactures and sells mostly skincare, and held various global roles in European countries and then in the United States. And then at some point really felt this urge to make sure that all fellow change makers in terms of, mission first companies actually receive the kind of money, the kind of investment that helps them achieve their mission, rather than that money having a different mission from the purpose of the company itself. I spent a few years working with an impact-focused family office. Also, dabbled a little bit in private equity directly, and then moved out west to join the team at RSF Social Finance. And in a nutshell, what we do is we at RSF, we provide loans to social entrepreneurs throughout North America. So these are the for-profit and non-profit organizations that are helping us, make this a more healthy, more just world, and are combating climate change. Franz, how about you? What was your journey?
Yeah, thank you, Jasper, and honored to be on with you. So I come at this work with a background actually in politics, having worked for Barack Obama for 9 years of my life. I often say I gave the government my 20s because I started as a field organizer back in Iowa, knocking doors and making phone calls to get him elected, and then worked on climate and energy and conservation at the US Department of Agriculture, the White House, and then finally the US State Department to negotiate the Paris Agreement. And leaders from across the world are gathered here in New York City today and this week to do the UN General Assembly and relook at all of the challenges before our rapidly changing world. And I'm proud to say, having been in several meetings with many of those leaders, in fact, even just this morning, that they really have centered climate at the international discussion. And the head of the UN Framework Convention on Climate Change actually has also said that now it's on nations to center climate change in their agendas. But what we do at Raise Green is actually work to give the tools to anyone who wants to center the climate crisis and an equitable transition to a clean energy economy at the center of their community. And what does that mean? Well, we make it easy for people to invest as little as $100 directly into climate projects like solar on a school, like an electric vehicle charging company, in your state, or like energy efficiency for small to medium enterprises, for example. So we're a marketplace. We take non-accredited investors as well as accredited investors alike. And we feel that the power of bringing more people into the movement and getting more people directly invested into the solutions that are going to get us out of the climate crisis is so critical, just as critical as moving large amounts of capital into the space. So Jasper, one thing that I've been hearing here in New York is this tension between values and returns. And in fact, I was in a roundtable yesterday with Mark Carney, who is, has about 15 different jobs, one of which is Brookfield Asset Management, and heard him talking about the return profiles, high single teens or high teens targets of returns on assets under management for large asset managers. Now, that is one motivation. At the same time, the intention about what are we trying to do with moving capital into the climate transition is a values-driven approach to investing. So I know you've thought a lot about this tension, and I would love to ask you to share some of the thinking and how RSF Social Finance is working on balancing the values that we have to drive emission reductions and a more equitable transition with a return profile that is available in this largest economic opportunity in history.
That's a really great question, and I'm going to go off and go a little bit into the deep end here, if you'll allow me. So,
please.
The question between, are we values driven or financial return driven when investing? It assumes that it's a dichotomy, right? Or it's a binary choice. And the one way to look at it is, are we doing philanthropy or are we doing serious investing where it's really about the financial return? And looking at that spectrum or that continuum with philanthropy on the one end, where you have not a transactional value, essentially, it's a free gift, right? Pure philanthropy is a gift without expecting anything back. It's like giving your friend a birthday gift. You don't expect anything in return. That's pure philanthropy. And then, you have the market based kind of, call it cutthroat capitalist investing, where you're saying, I only care about IRR. I don't care at all about what impact it has. Private prisons, weapons, oil, doesn't matter. It's all about the return. But there's a lot of space in between those two, where and I think both of our organizations are somewhere on that spectrum, where you're saying, well, financial return is important, but other things are important too. And I don't think it's right to try and choose between one or the other and say, one needs to come out on top. It's really about how do you balance these two things. And the way that we look at it at RSF Social Finance is that money is a tool. So, and that's kind of off the, a little bit off the grid, if you will. So money is not the goal, money is a tool. Making money is not unimportant, don't get me wrong. There's nothing against it. And we need to do that too. And, our clients do, of course. But it's about balancing between financial returns, impact, and risk, obviously. Those three vectors, and finding the right balance there is, I think, is super important. And if we do that well, then the conversation goes something like this. If there's a, low double-digit return on an investment, who should receive what portion of that, right? Rather than 100% automatically going to the shareholder or the investor, maybe the question is, well, what proportion should go to the community? What portion do should be reinvested maybe? Earns always 100% go to the investor.
That's a good characterization of the tension, and I like actually the three-part axis that you have, which impact, return, and then risk, because certainly risk has to play a factor here as well. One thing that we look at Raise Green, that's a risk that has really just pooled in climate. As emissions have been this externality to the economy because we haven't had a price on carbon, at least not pervasively across the world. And so much of the risk that's associated with the fossil fuel industry, has pooled in the climate and is now manifesting itself in ways that are uncontrollable to us and to humanity. And certainly, the thrust to keep us on a low carbon development pathway is at the forefront, as I said, international agenda, national agendas, and now at the community scale as well. So, Jasper, you all have this term for what you do at RSF Social Finance that you shared with me, called integrated capital. And to me, it spurs a very inspiring paper that I read as a graduate student called Beyond Returns, where there was an evaluation of what are the ways that we can actually not just prioritize returns, but also prioritize impact. And there are really two main ways that this paper found. There's a Zurich and MIT paper. One was shareholder advocacy, so holding public companies and voting your shares. And the other was allocating capital into inefficient markets, or giving money or putting money into places where it's difficult to get or where it hasn't been de-risked. So I would ask you to share a little bit more about what is integrated capital to you. How does RSF orient itself around that concept, and the incredible work that you all are doing?
Yeah, thank you. So integrated capital is a way to deploy different types of capital, monetary and non-monetary, so that an enterprise, because we're talking about climate now, so a company or a nonprofit that's focused on providing solutions for the climate crisis, so that they can be maximally effective and efficient with that capital. So rather than for us to say, well, let's try and sell you a loan, right, which is mostly what RSF does, is we'll sit down with an entrepreneur and look at their entire needs and maybe say, well, what you need is a $500,000 line of credit, but you also need to look at getting, say, $1 million of equity in, maybe from Raise Green, right? And then maybe you need to find a $10,000 grant somewhere so that you can write a strategic plan to make it all happen. So that is a way of looking at different asset classes or different forms of capital that are somewhere on that spectrum, which, by the way, includes the non-financial capital. So it's network capital, it's relationships, it's human capital. So who do we know within our network who can support an enterprise, an entrepreneur, to advance their mission? And RSF is able to offer some of those forms of capital and not all of them. As I said before, we specialize in lending, and we partner with equity providers, with family offices, with organizations like Raise Green, to make sure that, as an impact investing space, we offer these entrepreneurs solutions that are built on collaboration rather than competition. So we don't want to compete against other funders, but say, how can we lock arms basically and support this space so that it can, the people who are providing the solutions can do more of that.
Yeah, I love it. I think it just centers the accessibility piece of being able to really mobilize resources to answer any problem, but in this context, the climate challenge, as beyond just the capital that's necessary. We often hear this kind of a phrase of, "Well, throw money at the problem," and I think the truth is that's not going to get it done. We need to marshal all of the resources of human ingenuity, of that nature has to offer, as well as our networks and our spirits ultimately, to put everything we have to work. And I love this sort of holistic approach of integrated capital that you all offer at RSF, and that we can of course help supplement at Raise Green. And actually, so just this week we've seen as well that basically there is still so much more need, particularly on resilience finance. So things like seawalls and planning for sea level rise, disaster preparedness and response. That all Puerto Rico was just hit with a large hurricane and is totally their entire power grid went down, and they have no potable water. And similarly, awful floods in Pakistan. These are the types of climate impacts that are already hitting, that we're seeing, and that constantly get echoed here at Climate Week among diplomats, business leaders, and investors and entrepreneurs alike. So bringing it all to roost of, look, we need all the tools in the toolbox is important. So speaking of tools in the toolbox, the Fed here in the US just announced that they are going to make another interest rate hike, even amid massive inflation in the US. Of course, Congress just took an enormous step to try to reduce inflation by passing the single largest climate investment in US history of $370 billion going into climate solutions over the next 10 years or so. But you all at RSF Social Finance, Jasper, have a very interesting approach to interest rates. And I think it's incredibly compelling. I would love to give you a chance to share what that looks like and how you're using interest rates to further access and inclusion.
Thank you. Yeah, it's quite a remarkable way of setting interest rates. So just in terms of the mechanics, so at RSF we have a loan fund called the Social Investment Fund. Non-accredited and accredited investors put anything above $1,000 in there, and then every 90 days it automatically renews and people can take their money out at the end of every quarter. So individuals and organizations that have invested in that loan fund are of course compensated also for the fact that we can use their money to make loans to social enterprises, and that's the interest rate that we pay to them at the end of every quarter. And linked to that is obviously the interest that the social enterprises pay to RSF. So at the end of every quarter, we have a so-called community pricing gathering where representatives of borrowers and representatives of investors in the lending fund, in the loan fund, together with RSF staff members, gather around the table and talk about what would happen, what the economic impact would be of us increasing or decreasing the rate. So rather than following the Fed or the 10-year Treasury or in the past LIBOR or some Wall Street metric, we say, let's look at the reality on the ground of our investors and the borrowers, and also RSF, that's clearly in between as an intermediary, to get input before we decide what the rate is going to be for the next quarter. And last week, and Franz, I shared this with you, I think in the preparation, something really remarkable happened. I don't think it's ever happened before in the 13 years that we've been doing this. So rates in the market are rising rapidly, right? 75 basis points more And it's so clearly we're in an environment in which rates are going up. And the representatives of the investors of RSF last week said, because social enterprises are suffering from inflation so much, let's take a stand and lower the interest rate so that they pay less on their loans rather than more, which is what's the case with everything else that they need to pay. And this in an effort to help them reduce their cost and hopefully contribute at least a little bit to fighting inflation within our little community. And it was remarkable. We're embracing this. It's counter market. And it is, I believe, something that really shows the strength of making interdependencies visible within an investor community.
Yeah, it's such a powerful example of doing things counter to the market. I mean, I think it's brilliant and frankly bold and inspiring. And you know, I think you mentioned another thing to me as we were talking about it before, which was that you know, a lot about the financial system is broken and is not working for everyone. It's working for a few, and you know, that's a large part of the reason it sounded like why you've made this move to, rather than raise rates, cut them. And you know, it draws, I think, out in me and the way that we approach Raise Green at a rationale that, you know, 90% of Americans are non-accredited investors, people making less than $250,000 a year or have less than $1 million in net worth, myself included. You know, and historically, all the way up until really 2016, we've not had an opportunity to invest into private companies, early stage ventures or private businesses that are not publicly traded on a stock exchange. So, you know, opening up that access, and then, you know, which is counterintuitive to, you know, large capital providers and asset managers and owners historically, I think is another approach to really flipping the script and using advocacy to shift the industry. So at this point, I want to give the audience an opportunity to ask some questions, and I see at least one or two have come in. So folks, if you're listening and you're keyed into something that we're saying, or you have a question writ large about either of our organizations or Climate Week, or using investment as a form of advocacy, please pop a question into the chat. We will try to get to them all. And I'm seeing, I think our first question is, what can an investor expect their returns, both financial, social, and environmental, to be when they invest through your organization? So Jasper, do you want to take that one?
Happy to. Yeah, happy to. Thanks. So the financial return on the notes that we issue in the Social Investment Fund are 25 basis points. So they're slightly higher than zero. The risk, you know, of course, that needs to have an asterisk always, but has proven to be fairly low. In 38 years, we've always repaid principal plus interest to every single investor. And then the social and environmental return are really the stories, and you know, it's what's made possible, you know, through making loans to small and mid-sized social enterprises throughout the United States that are helping to mitigate climate change and working directly in communities. And what I do want to add to this is I'm a big fan of Paul Hawken, who in his most recent book, Regeneration, makes a very, very clear point that I absolutely think he's right with, namely social justice and the climate crisis aren't correlated. There's a causality, you know, the injustice has caused the climate change. And I invite everybody to think about what that means. But for us at RSF, that means that we always need to look at both. So it's not only what's the climate outcome that we're driving for, but definitely also who is making the decisions, what are the communities that benefit from this, and how can we support really the 90% of Americans, Franz, that you were talking about, that are not accredited investors for all the reasons that we know. Let me grab the next one and
Sure.
ask you that question. So how do you at Raise Green choose what projects and organizations are funded on your platform?
I love this one. So, the way that we look at this from a standpoint of project selection, and we're a two-sided marketplace. So we have folks coming to us to raise money, and then folks coming to us to find projects to put money into. And when we have people come in who are looking to raise money, we take everything from folks raising for a project finance company, like a solar project on the rooftop of a school, or a wind project that is raising money to get more community involvement, to clean energy or climate tech ventures, so early stage companies. And I'll take one example. So we just worked with a company called We Solar, which is the first Black woman-owned community solar company in the United States. And they are setting a new sort of paradigm for how to acquire customers that are interested in going solar but don't have roof space to do it. And so we look at that company through the lens, and other companies that are coming to us who are looking to raise money through the lens of the RAISE model. So we look for the opportunity to produce revenue first and foremost, because these are investments. They're not donations. There's a place for donations, and you can go to Kickstarter and find those types of things. But on Raise Green, you are making investments, and so we're looking for businesses that can return capital, principal plus interest, or in the case of an equity investment, an opportunity to own a piece of that business long term. So revenue is the first one. Ambition. So is the team excited about what they're doing? Are they capable of doing what they're looking to do and deliver on that? And then are those goals sufficiently ambitious to achieve something in the order of what they're setting out to do? So, and then we also look for impact that's both social and environmental. So that's our RAISE model, which also happens to match our name. So that's how we pick projects.
Thank you. That's so great. That acronym, you should trademark it.
Maybe we'll think about that. But for now, it's out in the public domain. So
sure, yeah.
We did get a new question just now, and so I'll jump ahead here. This is, can you give 1 to 2 examples of other funds or financial institutions you have or would look forward to partnering with based on their ethos and approach, and why? Jasper, do you want to take that?
Absolutely. So there's this is a really good question. The kinds of organizations that we like to partner with are family offices, because they can have a timeline that can meet the actual needs of the enterprise, rather than having an artificial timeline that's usually the case for traditional PE funds or VC players. But we also really like to partner, for instance, with, and we are partnering with Beneficial State Bank here out west. So that's a bank that's really focused on doing the right thing and doing it the right way. There are several impact investing funds that we have a, call it a loose partnership with, because they provide equity investment where we can provide debt. Another organization that I really appreciate is Impact Assets, a donor advised funds provider that also offers the opportunity for people to make direct investments in companies, in impact companies, which is a really neat way to use philanthropic capital before it's actually given away. And then finally, I will say endowed foundations. And I'll be honest, we're having a hard time there talking to the fund managers at the foundations that are used to invest their corpus with a return goal, whereas the giving is focused on, maybe mitigating climate change or, supporting charitable purposes. And when we say, you can invest in our fund and then you'll get your money back, and then you can give it away, it's been hard to get any traction there, but we would love to partner. Yeah. How's that for you, Franz?
Awesome. Yeah. I will answer that by actually putting a slide on the screen here that I would like to share with everybody. And I know that we're nearing the end of our time. We promised to be prompt, but is this slide showing up now with the QR code?
Yes.
Excellent. So anyone who's interested in partnering with us, there are 3 real ways to do it. One is simple. You can go onto our marketplace and you can invest directly into projects, and we consider that a form of partnership. And making that available to everyone really is core to our mission. So second is that if you have a climate company and you're looking to raise capital, and again, this could be a project or it could be a venture, we can help you raise up to $5 million per year through the marketplace, and would love to talk to you about that. And then third, if you just want to get involved and help us out, spread the word, we've just launched a program we call it Raise Green Impact Partners, and we're taking some applications for that. This is a way to be a change maker, help us work on attracting more investors and issuers, and really drive this movement forward. So please, take a screenshot of this or get the QR code, and you can partner with us at Raise Green. Jasper, I will give you the last word here, but I want to thank you and all of our participants here. Climate Week doesn't happen without fantastic people, and thank you all for tuning in and being part of this important movement. So Jasper, over to you to close us out.
Thank you, Franz. And I'll keep this short and sweet. Raise Green is the real deal, so I encourage everyone to invest with them. RSF Social Finance, we're also looking to raise additional capital into our social investment fund, and you can find everything online. Just Google RSF Social Finance, and you'll find the link there to open an account with us. But I'm so glad that we could do this together, Franz, and I appreciate the invitation.
Fantastic. Thank you, everyone. Have a great week, and onward and upward.
All right.
Thanks,
Thank you.
Jasper.